opportunity to invest in Tesla and they missed out on the opportunity and saw it like skyrocket. A lot of those people. Hi everyone. So today I'm going to discuss 3.5 mistakes to avoid when investing. I started investing about 2 years ago, and there's so many points that would have really helped me 2 years ago. So I thought I'd share it today and, help some people out, help some people to level up, because we want to get as much coins as we can. So I would say the first mistake to avoid when investing, I'd call it tunnel vision when investing. So what that means is really focusing on the short term too much. Let me give you an example, probably the best way to show it. So, alright, cool. So this is my investor app. If you look at this over 7 days, you're going to think, oh, this investment's doing amazing. Look at the ways it's gone up. If you look at this over a month, on the other hand, it's the completely different view. So you're thinking, oh, actually, this started off at 35.27 and it's gone down to 34.76. Especially at this point, £34.3p. You're probably thinking, what the heck was going on? Right? So with these views, it really distorts the picture as it's not really clear what you're seeing. So in my opinion, what I found to be more effective is looking at 6 months, looking at a year, and looking at max. Because if you look at the 6-month picture, you're going to be able to see, okay, it started off around 32.92. It's gone up to about 34.79. So it's made generally a good progression over the last 6 months. Look at it for the last year. Probably started at 33. It's gone down a bit. It's probably like a U shape. Gone up to 34.83, fine. Then if you look at maximum, so this is, okay, in this case it's to 2018. So as far back as it can go, you can see it started off about £20.91 and gradually it's been increasing. Now it's at 34.79. So in my opinion, I think looking at these 3 views, 6 months, 1 year max, is much more effective as you're able to basically stand back and see the big picture of what's happening with your investment rather than looking at day-to-day fluctuations. Like for example, if you were here, if you were down, here, for example, you'd be thinking, oh, what the heck has happened? But not really much, it's kind of around the same number. But there's going to be examples where you're going to see wild fluctuations. So it's really important that, in my opinion, that you keep, stand back, look at the big picture, 6 months, a year max, and be able to look at your investments that way and evaluate your investments that way. So that's definitely one mistake to avoid. Let's move on to the next point. The next mistake to avoid is letting your heart roll over your head. So with that one, just don't get emotionally invested. Don't get too emotionally invested. I think with the investments, especially if you really like it, and you really into it, you really believe in the vision, really buy into the vision. I think sometimes you can really get emotionally invested where you really want, of course you want the investments to do well, but sometimes you can get too invested that you're not really looking at the realities of what's happening. Maybe it's not really doing well, or maybe, things are turning, but you're sort of just thinking, oh, things are gonna turn. It's time for your head to roll over your heart. So that's definitely a big mistake to avoid. I certainly did that as well. So with one of my investments, it was going down. I was sort of thinking, oh, with it going down, I was thinking I could buy more at a cheaper price. It was that kind of thing. I could buy more at a cheaper price. It's going to get better. But the reality was the economy is not doing well. There was the times of, during COVID, where you had your rise of inflation, rise of interest, and all this stuff was happening. So it was around that time. So one of my investments in particular was really, taking a pounding. And, I just thought, I'm going to invest at a cheaper price. I'm going to keep, pumping more money. And that's because I was really just emotionally invested into the investment. And I think that was part of it. Looking back on it, one thing that you guys can do is, maybe if you're going to go with that strategy, is maybe it might not be like every month. It might be like maybe every few months you might look at it and think, okay, let me invest a bit more money. But yeah, definitely something to do. Certainly let your head roll over your heart. Don't get too sucked into it. And just try and keep that sensibility. It will definitely save you a lot in the long run. So that's definitely one I would say. So the next one I would say would be focusing too much on sales. Yeah, focusing too much on sales. So I know sales is normally that big, chunky, tasty number that we see, 2 million in sales, 10 million in sales, 5 million in sales. But the real question is, how does that translate into profit? What does that mean on a profit level? There's this quote that I got from Duncan Bannatyne, which says, Duncan Bannatyne is a dragon. All my Dragon's Den guys, you know yourselves. This show called Dragon's Den. He was a former dragon for Dragon's Den UK.
One more question. I forgot what it is, but it's going to come back to me. You punchline.
There's this quote that he used to say that I remember him saying on one episode. I remember writing it down. Sales is vanity, profit is sanity, cash is king. Sales is vanity, profit is sanity, cash is king. So what that means is that the sales number looks nice. It looks really, really nice, but it's just vanity. So it's just something that just looks nice. It's like a mirage. It appears like something that's nice, but it's not really, you're not really seeing the real picture. And then profit is sanity. Now you're really seeing the reality of what's happening in the business after your expenses and costs have gone up. What is the actual bottom line? What is the profit number of the business? Is the business actually making a profit? Yes, it can be making 8 billion in sales, 10 billion in sales, 5 billion in sales. Okay. But if it's making a loss at the end of it, what does that mean? Does that matter? And in fact, I've got an example of that happening. So I've got, if you click the link above, if you're interested, one of the investments that I invested in, I lost quite a bit of money on it. But one of the investments I invested in was in Kazoo. And that was a similar thing that was happening. When they were presenting the sales was doing well. So when you looked at it, the sales was actually doing well. So Kazoo is a used car company. So what it was trying to do was disrupt the used car company. So for the American guys, that's the Carvana version. So effectively, it was one of the first companies to sell used cars online. So it was really disrupting the market. So when it was showing its sales, it was really, you could really see an upward trajectory month on, like quarter on quarter, month on month. You could just see. But in reality, it was making a loss. And that was one of the things I explained in the video. So that's really one of the takeaways that. So yeah, link is in the description box as well if you're interested. But yeah, you can watch that after. So with that, yeah. So the profit number is the one that you really should be looking at, and also the cash flow number as well. I can explain about cash flow if you're interested in a future video. If you're interested, let me know down below. But also the cash flow number as well. But particularly, I would say profit number and the cash flow number. These are the key ones to be looking at. It's nice. Don't get me wrong. Sales is still nice to look at. But take it with a pinch of salt. Take the sales with a pinch of salt. It's the profit and the cash is the ones that you really want to focus on. That's a major one. There's a lot of, actually, you'll be surprised, a lot of people don't really understand that little formula. But trust me, write it down, memorize it, commit it to mind. It's gonna, help you to really really be able to assess investments better. And, hopefully it can help you to, minimize your losses. So only invest the money that you're comfortable losing. So that's a really, really, really important one. Really, really important mistake to avoid, because there are lots of people that invest way above. I've heard horror stories of people investing their pensions, their life savings, and there's been like fraud cases, like for example, the Nikola. I don't know if you've heard of it, the Nikola investment, where there was this investor that was claiming that he's got this revolutionary technology that could, that was going to revolutionize the car industry. And a lot of what he was doing was drawing parallels with Tesla. So what was happening was a lot of people that had missed out on Tesla, of the early like maybe they had an opportunity to invest in Tesla and they missed out on the opportunity and saw it like skyrocket. A lot of those people, and also I think part of it as well was it was kind of that thing of, oh, this company is investing, I ought to invest. This person is investing, I ought to invest. So maybe they didn't really go through it as thoroughly as they would have done. But anyway, they invested in this company called Nikola. This guy ended up being like a fraudster. A lot of people lost a lot of money. Maybe I might do a video of that in the future. Let me know if you're interested in that. But yeah, a lot of people lost a lot of money. And I was hearing that there were cases of people investing their entire pensions, entire life savings, because they were thinking, whoa, if this makes money the way Tesla does, wow, if I put in, 50K or 60K into that, it's going to skyrocket. And unfortunately, it turned out to be a fraud. A lot of people lost a lot of money. So it's a major, major, major tip. Please only invest what you're willing to lose. So of course, everybody wants to win, everyone wants to make money. But the reality is, worst case scenario, unfortunately, you might lose the money. So it's really, really important to make sure you're taking care of your your priorities, your bills, rent, and so on. Make sure you're taking care of the priorities, and the investment is just, if you're going to invest, make sure you do your proper thorough research, and it's only the amount you're willing to lose that you're willing to put into the ring to invest. So look, there's going to be lots more bangers coming up in the future. So make sure you subscribe, make sure you like, make sure you comment. We're going to try and help you to make money, save money, make your life easier. That's what this channel is all about. Join us on the journey. Let's make that bread. Yeah, see you guys next time. Take care.